Happy Thursday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for another jam-packed daily market update. If you're new around here, we drop one of these every single day around 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets. One thing that we do here on this channel is we look at the crypto space in the context of the broader markets, and there's something pretty spectacular taking place. We are going to witness a fundamental shift, the first one in my lifetime, in the monetary system. And actually where we're going to be starting, and crypto plays a role in enabling this new monetary system, providing an alternative to the existing one, perhaps. And to start this video off, what we're going to be doing is we're going to be looking at what Citadel's CEO, Citadel, one of the largest financial institutions in the world, what their CEO and I think he was a co-founder or founder, Ken Griffin, has to say on all of this. And we've been talking about this concept of a financial rapture taking place. And the concept of a rapture, using the book of Revelation, is that obviously depending on what denomination of the Christian faith you are, they all slightly have different accounts of Revelation and certainly tribulation and things like that. But long story short, you would have seen it in films also. You know, Jesus comes back and he takes up to heaven those who are righteous. Again, different faiths believe it plays out differently, but this is the kind of basic concept. And the rest get left on earth to endure the vials that get poured out on them. And I've said that people that own assets are the ones that are, in this instance, righteous. Potentially not the case in terms of that, but and everybody else gets left to kind of stay here and have to endure fiatdom at a time when the fiat systems are going to get proliferated massively. And this is exactly what Ken Griffin is warning. I think this was a path that we were initiated on back in 2008. Since then, the dollar's been in an uptrend that it's about to break down from at a time when they're about to essentially, or alarm bells are ringing. And we see that with gold. We see that in our recent chart, which is the SPY versus USM2. Very telling about what's to come for the fiat systems. Perhaps more so than the SPY. And the thing is, this is my concept of the financial rapture. You need to be positioned in assets external from, we'll call the fiat system sin, to stick on our analogy, so that you can get elevated up and you don't have to endure whatever tribulations are thrown at you through essentially being in the fiat systems. Anyway, let's dive into, we've gone a long way around explaining that. Let's dive into what Ken Griffin is saying. And then we have huge news for us here in the UK, as yesterday they lifted the ban on crypto ETNs. Now, people are putting out warnings, but that's natural. Let's dive into what Ken Griffin over at Citadel has to say on what's happening right now. Everybody needs to know about this because it's directly going to affect their life.
Inflation is substantially above target and substantially above target in all forecasts for next year. I mean, it's part of the reason the dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the US dollar in 6 months in 50 years. Gold is at record highs. And the appreciation in other dollar substitutes, to use that word loosely, in items like crypto, for example, is unbelievable. So we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis US sovereign risk.
Are you really seeing that?
No, just check the price of gold.
Well,
I mean, I don't have to look very hard.
It's a life of its own. Yeah.
What?
It's a life of its own, gold.
No, but it's a life of its own as you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. And there's been plenty of published research in recent weeks, months, about foreign investors now when they buy US equities, hedging the returns back to their local currency. So that, again, is a bifurcation of I'm going to bet on American business, but I want to immunize some of my sovereign exposure to the United States.
Really, Ken very nicely summarizes what's going on right now. And this is the financial, we call it the financial rapture. We like to use sort of analogies and use terminology like a rapture because it's going to stick in people's heads. But what's happening is the fiat systems, not just the dollar, but the dollar is the fiat system. And we went off of that in 1971 with the Nixon shock. And look at what precious metals did then. Look at what assets did following that as you moved your currency from being gold-backed or part gold-backed to sort of fiat-backed, you know, faith-backed, which is where we get the word sort of fiat from. And we're at a stage now where people just aren't swallowing that pill anymore, and they're looking for alternatives. This is why gold is very much that canary in the gold mine right now. I mean, it truly is that canary in the gold mine. Gold's hit all of our targets. I get questions saying, Rupert, where's gold going to next? I don't know. I don't have any targets for it. We could put extensions on and things like this, but I'm a sort of traditional technical analyst. We were predicting a $3,500 gold way back in 2022, going into 2022, in fact, and it's got there. Gold is screaming that there's something fundamentally wrong. And if people are moving away from this old system into a new one, that old system is the debt markets. At what point do they have to come in and start doing sort of yield controls, like what we see in Japan, which is a great example of how yield controls don't always equal inflation. But in regards to yield controls, in the sense that you're just buying up the debt and you're being the sort of backstop, as it were, that's going to create mass inflation. I think that's what's coming. And I think I see further downside as a result of all these things perhaps fundamentally taking place for the dollar. Why is any of this relevant to us as asset holders? Because we own assets priced in these fiats. The great game is buy assets, get rich. Own money, hoard money, get poor. Work for money, get poor. Whenever I get paid, it's why some of the concepts of the richest man in Babylon are great, because he taught, put 20% of your earnings at least, or 10%, whatever it was, into assets. And the reason that works is because fiat devalues in regards to it, certainly with a kind of monetary regime that we have. The dollar is about to lose ground, and I think it's because of the fundamental things that are going on. That's relevant to us as asset holders because it's going to see assets do well. I have shown you this before, guys, but I'll show you again just to really put my point home. The euro is about to make a move against the dollar, which you'd expect given what we're expecting for the Dixie. The Great British Pound also, who knows why in regards to why the Great British Pound, with the pure state of Britain right now, and it is in an absolute state. But the pound is going to rally, and it's because of these things that we're fundamentally talking about. And the yen also, the widowmaker herself, the Japanese yen, we've looked at a number of things for this, is also, I believe, about to start to move against the dollar. And it's because I think you've got a great printing coming. I think that's what gold signaling or a changing in the fiat systems or certainly a further debasement. And as Ken's talking about, people are running to alternatives. In regards to currencies, people are no longer looking at the dollar as that kind of strong currency. They're cashing out into their own. He looks at the 2-month research on that. That's interesting. And in regards to the SPY versus M2, US M2, which accounts for money inflation, it accounts for it. Really, this hasn't recovered from 2000s. It's about to break out, which shows a real loss of value. So it's one of two things. Either they're going to completely stop printing and the markets are going to go up. How likely do you think that is? That's probably not the likely case. Or they're going to continue to print and actually accelerate it. But the devaluing in regards to assets of that currency is really going to explode. And all of this is exceptionally relevant. Bitcoin is like the alpha in regards to, I couldn't say anti-fiat, you could probably say gold is that. But in regards to an asset that was literally designed to benefit from all of this. And I don't want to get conspiratorial and say, isn't it remarkable how Bitcoin was given to us in 2008 when the system was on its kind of last legs and they needed something new to switch over to? It's here, and we're moving towards this kind of internet of value that's going to be enabled by cryptocurrencies, public distributed ledgers. And that's not all good news with that, because I don't know what that world looks like. But what I am saying is if you own assets, you're going to be, I'm not saying you're going to heaven. In our analogy terms, that would be the case. But I am saying you're going to be far better off than the people that don't, that just have fiat or work month to month for fiat. And that's most people. That was me at one point. This is why we're so zealous about people investing. It's not just a matter of getting rich and buying nice things. It's a matter of freedom, in my opinion. Understanding the financial system. Who was it that said, it's a good job that people don't understand, my workers don't understand how money works, otherwise there'd be a revolution in the morning? Something like that. Was it Henry Ford, maybe? Perhaps. So we wanted to spend this daily talking about it. We've covered all the news. Some news I do want to speak about quickly is the FCA. This is an old article. It's back from August. Firms will soon be able to give retail customers access to crypto exchange-traded notes under changes announced by the FCA. And this came into effect yesterday. The changes will come into force on the 8th of October. Now, depending on what brokerage you use, that will, of course, differ. They'll all onboard them at their own pace, but it's a great step in the right direction. Crypto really does walk, talk, and quack like a duck. And when you understand what we've kind of focused on this was the big context of what's happening in the world with the financial system as we know it. We've looked at how assets are setting up. And they're setting up as you'd expect. Certainly we spoke about the S&P and how we think that's in a new bull market. They're setting up in the manner that you'd expect given what we're looking at in the context of the financial system, what we think is to come for it. Further devaluation, further loss of trust, a flight to assets, which we're seeing gold to Canary in that gold mine. They're set up in the same way. And crypto, of course, is correlated to that, but set up in its own way technically, and has this great fundamental story. And when it walks, talks, and quacks like a duck, we're all quacking. We're all quackers. We've got a great setup, guys. This is not just about making loads of money in crypto. It is about that, of course. But this is also literally about freedom. And I'm not even suggesting that the cryptos are going to lead to a free system. I don't think that is what's coming. But I think they're going to provide you a little bit more wealth than the next person to be able to arbitrage. And we all want that, don't we? You know, we all want to be wealthier than the guy next to us. Or I certainly do. Not ashamed to say it. Some people are. I think honesty is the best policy. That's what this provides. It's going to provide you more freedoms based on that wealth. Depending on what they throw at us. Maybe I don't know. Anyway, that's it from me. I'm going to love and leave you all. It's always an absolute pleasure. There's a lot going on, guys. I think, again, we didn't really give a crypto take on what Ken Griffith has to say. Or Griffin. But what he did say was, look, crypto as well we've seen a flight to crypto is essentially what he's hinting at. And of course, Citadel, all of them ready to get stuck in with this kind of industry. I'm going to love and leave you on that note. I don't think I had anything else that I wanted to share. I think that's really it. We do have Citibank talking about their forecast for the next 12 months. It aligns with really what we're looking at. The Ken Griffin news for me was the most interesting. Obviously, we've got BNY. They're now testing tokenized deposits. UK has actually appointed a digital markets champion for tokenization efforts. The UK, just quickly to read this to you guys, will appoint a so-called digital market champion to spearhead its efforts to digitize wholesale financial markets using blockchain technology. Hedera is going to play a role in that, I think. The new role will lead join up and coordinated private sector work on tokenization wholesale financial markets in the UK. Economic Secretary to the Treasury, Lucy Rigby, said, prepared remarks seen by Bloomberg News, a speech on Wednesday. Tokenization is the process through which traditional assets such as stocks, bonds are issued and sold. Blah, blah, blah. It's coming. The sort of move on to DLT, it's here. You need to sort of be prepared for it, I think. That's it from me. Not financial advice or just my opinion. And I'll see you all in the next one. Thanks for watching, guys. See you soon.